Good morning and happy Monday. Start of a new week. Wishing you have a good one. Welcome to today's episode of Morning Wealth. Three things that we will talk about. Intel's drop, the week ahead featuring Fed, the GDP numbers and also an earnings avalanche. The focus will remain on US dollar. Shares of technology heavyweights dragged the S&P 500 lower on Friday towards a weekly loss, snapping a 3-week winning streak. The week was marked by big swings among shares of individual companies and a rotation between some of the market's winners and losers. The information technology sector, one of the market's biggest winners this year, was the biggest laggard for the S&P 500's 11 sectors for the week. So on Friday, S&P was down 0.6%, the Dow Jones was down 0.7%, and Nasdaq closed 0.9% lower. But on a weekly basis, Nasdaq was down 1.3% and the S&P 500 was down 0.3%. China on Friday ordered the closure of the US consulate in Chengdu, a city in the southwestern part of the nation, in a tit-for-tat retaliation against Washington's decision to shut down the Chinese consulate in Houston. China's major stock benchmarks, the Shanghai Composite Index, fell by 3.9% by the close of trading, capping off a second week of consecutive declines. Hong Kong's Hang Seng also retreated about 2.2%. Intel plunged 16% on Friday after warning of another delay in its 7nm production process and saying it may outsource major parts of the production, which could mark a big shift for the firm. At least 7 analysts downgraded the stock. Rival AMD jumped 17%, while the foundry TSMC also gained on hopes of getting this new business. The week ahead, it's a loaded week. The Fed will confront clear signs the US economic recovery is stalling when it meets July 28th and 29th. Officials will probably hold fire on more stimulus and repeat guidance to keep rates near zero as Congress debates more fiscal aid. A slew of second quarter GDPs is set to show the economic devastation that is being brought by the virus. The US may see an annualized contraction of about 35%, the steepest drop in records going back to 1940s, while the euro area is expected to register a drop of about 12% according to consensus. Hong Kong is also set for a more mild decline of about 7.7% on year. We'll also be looking for personal spending, personal income and personal spending data that will come out on Friday, this Friday. On the earnings side, Alphabet, Amazon, Apple and Samsung, they are the highlights on the tech earnings that will come out on Thursday. YouTube and cloud could offset the advertising weakness for Alphabet, while Amazon has room to surpass the top-line sales growth expectations, but may see logistical costs to stay high, is what the street is expecting. The focus for Apple will be on the fiscal 2021 sales. Big oil is also going to be out in force with results of Chevron, Exxon, Shell and Total due on Thursday and Friday. All are set for a quarterly loss in what is expected to be the worst period ever for the super majors. Strong revenue from oil trading may cushion some of the blow, is what some of the analysts are expecting. LVMH kicks off things on Monday, serving as a bellwether for a global luxury market. In the finance side of things, we'll be looking for Credit Suisse and Deutsche Bank to come in, as do Barclays, Nomura and Santander. On the semiconductor side, we will look out for NXP, AMD as well as Qualcomm. Consumers will be looking out for McDonald's and Starbucks. In the auto and transportation, we'll be looking out for GM, Fiat, Ford, Boeing as well as JetBlue. And lastly, on the pharma side, we'll be looking out for Pfizer, AstraZeneca, AbbVie and Gilead. I know there's a lot, but it's just one of those weeks, where there's just an earnings avalanche that comes through. On the FX side, it was a rough week for the US dollar. The greenback traded lower against all of the major currencies, falling to multi-month and in some cases multi-year lows in the process. Dollar yen, which has been consolidating in a tight range for more than a week, finally broke down on Friday, dropping below 106 to its weakest level in 4 months. The dollar weakness was the most pronounced against the euro and the Australian dollar. Euro dollar rose to its highest level since September 2018, while the Aussie US hit a 1-year high. USD will remain in focus this week with the Fed meet, GDP data and also the personal income data. We'll also be keenly watching how the unemployment benefits to workers will be handled. Come today, more than 20 million Americans will lose $600 a week of extra unemployment benefits that has kept them afloat over the past few months. The official deadline is July 31st, but based on the way states calculate and pay these benefits, the last payment for most people would be as of July 25th or 26th, which is already gone by. That's something that we'll have to watch out for on how the Republicans and the Democrats approach this whole unemployment benefits scheme. That's the update. Stay safe and healthy, everyone. Have a lovely week ahead and speak soon.